Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Massar and Tim Stenovec on Bloomberg Radio.
We are talking about Royal Caribbean Cruises. Shares are riding quite a wave higher, up about 13%, more than 13% at their high, almost 14%, in fact, hitting a record intraday, up the most in more than 2 years. It is the top gainer in the S&P 500, and it's lifted the entire group because Norwegian and Carnival also top gainers in the S&P 500. This is coming after Royal Caribbean reported a full-year profit forecast that blew past expectations as cruise demand continues to ramp up. They're also talking about getting into another area of the cruising world. For more on the outlook and what's driving metrics, we welcome the president and CEO of Royal Caribbean Group. He is Jason Liberty. He joins us from Miami, Florida. Jason, it's great to have you here with us. How are you?
I'm doing great, Carol, and thank you and Tim for having me today. Obviously, it's a great day on the share price, but it's a great representation of another incredible year here at the Royal Caribbean Group, and a really strong outlook for 2025.
Tell us what surprises you about the consistency in demand and the optimism that you are seeing, certainly in the cruising world, and what comes to demand. What's surprising you in how the strength that you are seeing?
Yeah, well, I think there's a few things that I would point to. I mean, certainly we have a lot of great demographics on our side in terms of more millennials coming into the space, multi-generational travel, a lot of active wealth transfer, and we see that more and more, which has been a surprise to me, just how much multi-generational travel where you have the patriarch or matriarch of the family paying for generations. I think that's been a little bit of a surprise. And there's also been just a continued flight to quality. We've invested so much in our ships and our brands and our destinations for so many decades. We're really now seeing these flowers bloom as we see consumers who are very healthy. They have great balance sheets, they have great jobs, and they're high-paying jobs, having this flight to quality for our brands and for our destinations.
When you talk about that flight to quality, break that down for us, where there's strength in the business and where you're seeing particular strength, and if there are any areas where you're not seeing strength.
Yeah, well, we are actually seeing strength in all markets that we source from. We're also seeing strength for all the different places that our ships go, whether that's in the Caribbean, Alaska, the Northeast, Europe, Australia, Southeast Asia, China. We're seeing strong demand kind of across the board, which is, I think, really great. We're also seeing, again, elevated spend on our ships, and that's really across the board. A lot of it is in the gaming, the beverage area, on the culinary side, spa, shore excursions. So people are really looking to make sure that they grab the experiences that they want to have, and they're willing to not only pay a little bit more money for that, but they're also willing to have more repetition of that. And that's how they're expanding the memories that they're building with their friends and family.
How much is that wrapping up, Jason? That is something that I've seen throughout the cruise industry, that it's not just about buying the ticket to get you on the ship, but it's about what you do once you're on the ship and possibly go off to other destinations, those bookings, right, that add to the experience, but they also add to your revenue line, right, and your profit line.
Yeah, that's exactly right. One, I think that we've gotten a lot better, whether it's through AI or other disruptive tech, to really take friction out of the experience of shopping with us, whether that's on the ticket side or whether that's also on the onboard side. And what we're doing is we're able to enhance the experience so they can do all the different things that they want to do. And in reality, while it's still very frustrating to me, while we're increasing share of wallet, we're still at a very significant discount to land-based vacation. And so for us, like we focus a little bit less on what's happening with our cruise competitors. We're trying to take a larger share of the $2 trillion marketplace in travel leisure. And for us, having the experiences that our guests want to do and also being able to make it easier for them to shop with us is winning for us.
The pace of bookings this year relative to last year, what does that tell you about demand where we're, when we're a little over a month past what is referred to in the industry as wave season?
Yeah. So the past couple of years, wave has been elevated not just for us but also for the entire industry, and we're continuing to see those waters rise here on the wave season. So we're seeing record booking weeks, we're seeing elevated pricing, and we're seeing a consumer that is not only willing to pay a little bit more money for their vacation experience, but they're also looking to book further out. So the booking window is continuing to extend. And they're also doing more and more pre-cruise booking activities for the activities that happen on the ship and off the ship to make sure they get the vacation experience that them and their family and friends want to have.
Are you surprised by it? You've been doing this a while. Like, are you surprised by the pace of demand?
Well, I have been doing this. I've been in the seat for a little over 3 years, and of course, I was the CFO before that. So I've been in the industry a while. Certainly, you're seeing an elevated demand for experiences. So clearly, coming out of COVID, you've seen a few different changes in behavior. One of which is very comfortable booking and interacting through technology. So we're able to take friction out of that experience. But you're also seeing just a trade, buy a lot less stuff. We want to buy experiences. We really appreciate the time with our friends and family. And we want to make sure that time that we have is one that is not only exceptional, but it's also with somebody who we trust will deliver that for us. And I think we have that trust. We value that trust with our customers each and every day.
All right, we want to talk a little bit more about the business, but Jason, we've been asking everybody who comes on, a CEO or anybody who runs an institution, a company, an organization, the dynamics in the backdrop, anything that could be impacted by policies out of the Trump administration, anything coming out of government. And I think about, we've talked about various policies that could lead to inflation, tariffs, on possible goods that could increase costs, immigration, the impact on the labor force. So I'm just curious, you guys are floating cities, you're massive ships. So the dynamics of kind of the economy, the U.S. economy certainly impact you. So I'm just curious, anything in particular that could come out of D.C. that you're watching very closely?
Well, look, I think we as we always have, we're going to work very closely with the administration. But I think what we're looking for is a healthy and happy consumer. And I think as long as the consumer has confidence in their spending and of course they seek great vacation experiences, which we think they're going to do, I think we feel very bullish about the future spending behavior of our customers. The other point that I would just add, which I think also brings us great comfort on whether if costs do rise in some form or fashion or there is inflation, is that point I made earlier that there is a significant gap to land-based vacation. There's a lot of value for the consumer in our different vacation products. And that's a good hedge for us if there is any type of change in the winds.
How are you guys doing at controlling costs right now, specifically when it comes to labor? Are you getting all the employees you need, and where are you getting them from?
Yeah, well, most of our employee base are international crew, so we're not really that impacted by rises on the wage side. Shore side, certainly, like every other company, there's inflationary pressures that can impact wages for our shore side and our corporate offices and so forth. We actually, our cost guide for this year was for us to be flat to up 1%. And we've been able to do that by really managing our supply chain, leveraging the scale as our business grows, and having a team that wakes up every day and says, how do we do it better? And doing all that and making sure we're enhancing the guest experience and we're not cutting the guest experience, because we feel that it's important for us to live up to our marketing and our reputation each and every day.
Jason, could any of that supply chain be impacted by tariffs?
I don't think so. Because we source a lot of the things that we source are really from here in the U.S. We're not really expecting any tariff impact. But we're watching it just like we're watching other things, on more in terms of how it would impact our customer, less so how it's going to impact our cost base.
What about when it does come to that international labor pool? Are there concerns about a crackdown on immigration affecting the way that employees on your ships are able to be on your ships when they're docked in the U.S.? How do you handle that?
Yeah, well, it's obviously something that we're always looking into, but I don't think that's a very high risk. We're an international maritime organization. Our crew are international maritime. They're really focused on being on the ships. So obviously we watch it and we try to manage it, but we don't see that as a high risk in terms of any policies that can come forward there.
Hey, listen, we want to talk about you guys getting into the river cruise market. Before we do so, you talked, though, a lot about destinations and experiences for those who get on ships. You guys have had great success with Coco Cay Private Island destination. That's in the Bahamas specifically. How could Perfect Day Mexico, which is another such destination, kind of drive some of that onboard spending that you were talking about a little bit earlier, and ticket prices when it opens in 2027?
Yeah, so I would say a few things about the destination experience. So you take, as you gave an example, a Perfect Day at Coco Cay, which, by the way, is the highest rated, has the highest net promoter score of any other destination we go to in the world. Wow. Because we do an exceptional job of delivering thrill and delivering chill. But we're not able to deliver that experience to all guests in the Caribbean. And so Perfect Day Mexico will allow us to not only ensure that especially on our Royal brand, has at least one perfect day when they're in the Caribbean, but it's also going to expand the catchment area of areas like Texas and west of the Mississippi, which will have an easier way to get to places like Galveston, where they can go in and have a perfect day. We're also adding Royal Beach Clubs, which will also expand the experience in places like Nassau, Bahamas, and also in Cozumel. So what we're trying to do is, again, continue to enhance the experience offering. We see ourselves as an experience organization with really a vision of, what we've always been great is delivering the best vacations in the world, and we want to be able to deliver a lifetime of those vacations over somebody's life.
And I just want to make sure I heard correctly, but in terms of Perfect Day Mexico, specifically driving onboard spending and ticket prices when it opened, can you give us any kind of color on that or specificity?
Yeah. Absolutely. I think one of the surprises when we opened Perfect Day at Coco Cay is not only did we get high demand to go to the island and people were willing to pay for things like water parks and overwater cabanas, but we also saw ships that touched Perfect Day Mexico got elevated pricing. And so we expect that's going to be the same thing here, is when you deliver the destination and the experience, our guests are willing to pay for that, and that's what we expect to occur in Mexico. It's also what we expect to occur with our Royal Beach Clubs as well. As we'll deliver an experience that's far superior to what is currently being offered in those different destinations.
I'm just going to say I'd like some thrill and chill right now because I'm tired of cold New York. I'm just going to put that out there.
All right, sign up, Carol. Speaking of,
it's available. It's available.
Okay, good to know.
No, I would say it's available, and I'm happy to help you book a cruise.
Well, let's talk about what's going on in the river cruise market. I mean, my in-laws are back from a river cruise this fall. My sister's back from a river cruise, both of those with different companies in Europe. Now you guys are getting in through the celebrity business. Why now?
Yeah, well, why now is, we've been seeing for some time, a growing trend with our guests that they're looking for additional vacations, not a substitute for going on a cruise, but additional vacations. And when we look at what are those additional vacations that they're going on, one of the things that we've seen a rise in is on the riverside. And so as we, again, seek to deliver a lifetime of vacations, and we want to leverage, having a single loyalty program, great reciprocity across our different brands, we're enhancing the flywheel, and we're investing in that flywheel so that we can get more reps out of our guests. And so we have to listen to what our guests are looking to do, and we have to be focused on how do we keep our customer in our ecosystem. And one of the ways of doing that is expanding the offering, and we think River is it's similar. It's certainly not exactly the same as an ocean cruise, and we think we can elevate that vacation experience significantly, not just on the ship in itself, but also on land.
So where are you going to go with those cruises?
Well, it's going to start off. We've ordered 10 ships so far, and it is an initial order, and those ships will be in Europe. But our expectation is we'll grow it in Europe, and we're also going to grow it around the world. We have a massive global footprint. We go to 1,000 different destinations. We source from all over the world, and we think there's a great opportunity to match those guests also on the riverside.
All right, going to leave it there. Listen, Jason, thank you so much. Covered so much ground and really appreciate it joining us to talk about the business and the outlook. Jason Liberty, folks, there. He's President and Chief Executive Officer of Royal Caribbean Group, joining us from Miami, Florida. As we said, this is one of the standout performers. It's been the top gaining stock in the S&P 500 today, up about 13% as we speak, and it's really just lifted the entire cruise group.
Well, earnings certainly front and center. So too is tomorrow's Fed decision. The policy-setting arm of the U.S. Central Bank kicking off its two-day meeting today. The Fed likely to keep rates unchanged in its first decision of the year. Yet, we can guarantee there'll be lots of questions about the new Trump administration, its impact on the U.S. economy, inflation, and more. So, with more on that, with us is a former U.S. Treasury and White House National Security Council staff member joining us from Cape Canaveral, Florida. Steve Skancke, good to have you back with us. Usually in a Fed week, we're talking about the Fed quite a bit on Monday, talking about the Fed quite a bit on Tuesday. With yesterday's rout in tech stocks, as it relates or triggered by concern over what China has been able to do for much less of a cost, or so it says, one Chinese startup, do you think questions about AI and the Chinese economy and the tech industry here in the U.S. will come up at all during tomorrow's press conference?
I would be surprised if it didn't. Well, first, thank you for having me on, and let me just add, maybe we should do this from a cruise ship sometime. I thought that was actually a nice conversation you guys just had. But yes, it has to come up certainly within the conversation during the meetings. How much Jerome Powell will allow the conversation to go that way during the press conference, I think that's to be determined. More likely to have conversations or questions about the deportation, impact on inflation, tariffs, threat of tariffs, disruption of supply chains, and what impact that has on inflation and economic growth.
It's interesting, too, because, on that AI route yesterday, which we were obsessed with and trying to make sense of, and I think the world is still, Deutsche Bank's U.S. economists came out and they wrote a note to clients, Steve, and I just want to share it with you. They said they acknowledge a scenario where a tech-driven sell-off hits American household wealth and ultimately slows down the up-to-now irrepressible consumer. Looking backwards, Deutsche Bank economic model showed that U.S. consumer spending growth, if not for the 2024 rally in equities, would have come in around 2% for last year rather than the 3% estimate. So I do think about how, and I'm curious the questions that you guys have been maybe getting from investors or the conversations you've been having in the last 24 hours, if that AI spend and euphoria that's been maybe behind a big part of the rally that we've seen over the last 2 years doesn't continue or has been built on kind of a shaky or different foundation that maybe isn't true, what that could mean in terms of economic growth going forward.
We get questions about that all the time, and what's remarkable is almost without exception and irrespective of industry or sector that our clients are working in or investing in otherwise, or where they have their own businesses, they are using AI in increasingly different ways. Some of it they're not spending very much on, but as they get into it, try it, see how it works, see what a difference it makes in their work planning, processing, customer outreach. They just use it more and more. And as they do that, then they're happy to pay for it. They're happy to invest on it in the company. I've been surprised at how quickly that has come. And I think the impact of the Chinese arrival will only accelerate that. Yes, it's going to have an impact on some of the big names that have been making a lot of money on this in the United States, but I don't think it's going to diminish it. And I don't think that the companies who are spending money are going to stop spending, maybe not as much, and that'll be positive for profits, which ultimately then will drive the stock market further and continue to support that consumer spending.
So should the Fed actually address this tomorrow?
They should have a conversation about it internally, because at the end of the day, it does go to the issues that you guys have mentioned: consumer spending, industrial production, how some of the semiconductor sector operates. What does this mean for more investment in semiconductor production in the United States? If the total demand is going to be different, but the big question is, will it be an offset against some of the other likely inflationary policies or initiatives of the new administration?
All right, so here we are, though. It is the first Fed meeting of 2025. They've kicked off the two-day meeting today. What do you think is the right monetary policy in your view right now? And the messaging, right? Because we really don't expect any kind of move yet tomorrow, but the messaging could be key, especially we're just off of the first press conference by the White House press secretary from the new Trump administration. There was a lot of questions about a lot of different policies. We know President Trump has been very busy in his first week or so here in the White House. There's a lot coming at people in general, at investors, at companies, so also at the Fed, right, as they try to determine monetary policy going forward. So what is the right messaging right now?
The right messaging, Carol, I believe, is steady as she goes. The Fed can applaud the positive core PCE inflation metric that it's likely to get on Friday. I mean, it's estimated based on CPI and producer price index. That's very attractive. 3-month and 6-month annualized core PCE inflation has come down. 6-month is at a 12-month low. They certainly want to mention that. Also, the continued growth in the economy. The big surprise in the jobs number for December, that was 100,000 jobs more than what the consensus estimate had been. And so I think that the Fed is in a good position, and I think that they ought to message their thought about economy looks good, inflation is coming back to our targets, we're comfortable where things are. It's time to pause and see what might be different, and for them really to exude confidence, belief that what they're doing is right, which I happen to think it is.
Right.
And not get sidetracked. President Trump in his Davos message talked about getting interest rates down.
Right.
Well, that will likely be a source of question into the press conference tomorrow.
All right, Steve, we gotta run. Forgive me. Steve Skancke, Chief Economic Advisor at Keel Point.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app, or watch us live on YouTube.
Well, from OpenAI to Meta and more, how in Silicon Valley, AI executives and employees are urgently, parsing the technology of the Chinese AI startup DeepSeek, something we talked about nonstop yesterday, continuing the conversation today. The questions out of Silicon Valley, they're questioning their assumptions about the economics, Tim, of AI and building it out.
It is today's big take, meaning it's what our editorial team deems a must-read story. It's also among our most read stories on the Bloomberg terminal. Check out Rachel's story and more from Bloomberg The Big Take on Bloomberg and at Bloomberg.com/Big Take. With us is that Rachel. She's Rachel Metz. She's Bloomberg News AI reporter. She joins us from our Bloomberg News Bureau in San Francisco. Rachel, as you point out in the piece, DeepSeek, for those in the know, had released LLMs a couple times over the last 18 months to 2 years. There was that first open source AI model, DeepSeek LLM, in late 2023. 2 more advanced models, V2 and V3, came out in mid to late 2024. Why did the news that was absorbed yesterday feel so dramatic when others have been watching DeepSeek for so long?
I mean, I think part of what you were seeing was excitement surrounding, or is, I should say, since it's ongoing, excitement surrounding R1, which is essentially a model that can reason kind of like humans do. I mean, I would call it reasoning with quotation marks because it's not quite doing exactly what we do, but it's similar to an existing model from OpenAI. Anthropic, which is a rival of OpenAI's, has also put out something similar. R1 is built on top of another model that DeepSeek recently released. And that combination of those things, it did what it did for not very much money in a very short period of time. And it also seems to have come up with some ways to build these things more efficiently, to build it more efficiently, and to have it work more efficiently. And those are all things that I think are getting a lot of people's attention.
All right, but does everybody in Silicon Valley buy it, believe it, that it really is efficient, that it doesn't cost as much? Like, are there still some questions to be answered?
There are questions to be answered. I think one of the things that's great here, though, is this company has released the model as an open source model. So that means that companies such as Hugging Face, and they're doing this right now, they can put together their own versions and deploy their own versions of this model and get a sense for how well it stacks up. We're also starting to see companies get very interested in using this model. So you may see more and more companies asking, say, a company like Databricks, hey, if they're a customer of Databricks, hey, could we use this from you? Companies that offer lots of models are seeing some very big interest from their customers.
How do we look at the geographic origins of DeepSeek coming from China, and whether that could be an issue with adoption outside of China? Like, would US companies be as willing to use this LLM as perhaps those that are built here in the US?
That's a great question. I would guess that for some companies, it would be probably a no. For some companies, it might be, or they might want to deploy or like roll out their own version of it. Since it's open source, you can do with it kind of what you want. So we might see some of that. I mean, what I expect we will certainly see is different companies, AI companies themselves, sort of rebuilding and trying to figure out how well this actually works. And maybe you'll see some people rolling it out as well.
All right, let's talk about those people in Silicon Valley. I mean, everybody seemed like it was a who's who of folks kind of tweeting or making comments on social, and it was like, yay, great job. But it also, Tim and I were kind of talking off air, is it like, yay, great. It's like when your nemesis gets the job you want, and you're like, congratulations, but I hope you fail. Is that, I mean, tell us about,
Carol Massar.
Sorry, but it's like, what's going on in Silicon Valley? Is everybody like, oh my God, Meta, Amazon, everybody who's been investing so much are saying, well, wait a minute.
Yeah, I think it's that kind of like mixed, probably some people are having mixed emotions, right? Like, wow, this is interesting. Maybe they did some interesting things here that we can replicate in our own work. Or maybe it feels validating in a sense, like OpenAI may feel validated by this, that they're on the right track with their own work, with O1 and O3. But yeah, I think some people are also like, wait, how did they do this? In what did they do exactly what they're saying that they did, in terms of spending only a very small amount of money? Usually these models cost lots and lots and lots of money to build. That's one of the things that got people most excited and also freaked out, as you could tell from the way the stock market reacted. If it doesn't cost a ton of money, you don't need a ton of high-powered chips to build these things, then what does that say for the future of the chip market, especially a company like NVIDIA that is the biggest maker of AI-geared chips?
Does it say also that OpenAI, Anthropic, and Meta's Llama have been doing it incorrectly?
I don't think that's what it says. I do think that it's clear that AI innovations can come from anywhere, and that lots of people, and this is not the only company, a lot of people are trying to figure out how can we make these AI models, which take up tons of compute and tons of money and tons of energy, how can we make them more efficiently in all kinds of aspects? I think that's something that we're already seeing and we're going to see more of. And it doesn't necessarily mean that people aren't going to want to buy chips or any other kinds of hardware that's related to this. I mean, it may actually be, I think it could totally be a net positive for the AI industry at large.
Hey, listen, one thing that jumped out for me too is Sam Altman, of course, of OpenAI. You include in the story that he's told his OpenAI employees that his startup is trying to understand if and to what extent DeepSeek's performance is the result of distilling OpenAI's models, that is, using the outputs of that company's AI to train a different model to have similar capabilities, or represents an independent research breakthrough, according to a person familiar. I mean, that distinction would be important to know.
Yeah, and I am sure that OpenAI is looking into that. I mean, they don't want people training on the outputs of their models. They're pretty upfront about that. If somebody did that, then that would certainly make OpenAI upset. I have no way of knowing if that's what this company did, but it is true that there are people that are wondering if that is what happened and trying to figure it out.
What happens if that is what happened?
Well, that remains to be seen, I guess. It could certainly lead to issues of. It could be problematic for them, perhaps legally. I'm really not sure. We would have to know exactly what happened, though.
Hey, Rachel, in the U.S.-China, I feel like tech war, right, that we've been talking about for years. If indeed they did what they said they did, what does that kind of maybe tell you about the expertise and knowledge and abilities of Chinese scientists, Chinese R&D, and Chinese tech? And just got about 30 seconds.
I think it just reinforces the fact that there are really smart people in AI all over the world. And I think we have long known that there are lots of smart people working on AI in China. And this just makes that extra super clear, that companies in the US need to pay attention to what's happening, not just in China, but all over the world, because there is talent everywhere. And a lot of people want to make their mark in this field.
All right, we're going to leave it on that note. Great story, great deep dive into a story that we are still kind of all obsessed about, safe to say. Bloomberg News AI reporter Rachel Metz. Check her out at Rachel Metz on X. You can also find her story at Bloomberg.com and on the Bloomberg terminal. NVIDIA shares, by the way, up 8% after losing about 17% yesterday.
Okay, still got a ways to go.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we are just about 18 minutes away from the closing bell. Charlie and Bill Maloney breaking down the trade for you on this Tuesday. We've got some earnings coming your way after the closing bell, including Starbucks, Chubb, and Corvo. So we'll be breaking them down after the close. We do want to see what our next guest has to say about the market environment, the earnings season so far, everything coming out of Washington, a lot to throw out. Larry Pitkowsky, he is managing partner and portfolio manager at Goodhaven Capital Management, back with us from Millburn, New Jersey. Larry, good to have you here. There is a lot coming at us. I do want to ask you about the market moves we saw yesterday, the concern in particular about the AI spend, investment plays that have really fueled market momentum over the last 2 years. Anything that we got yesterday that was a rethink for you, or was it just a sign that investors might seize on anything as an opportunity to maybe sell a little bit here?
Hey, Carol. Hey, Tim. I think from my perspective, and we do not have any money in any of the infrastructure companies of AI, NVIDIA, Broadcom, and whatnot, but it is a reminder that it is early days in figuring out who the winner is over a long period of time on being the key part of the AI infrastructure. And capitalism is filled with plenty of examples about who were leaders in the beginning and how it ended up, and human ingenuity leading to more efficiencies and figuring out ways to do things lower costs and whatnot. Our main exposure is we are longtime shareholders of Alphabet, and of course their and some of their brethren, their CapEx is revenue for a lot of the infrastructure providers. So, will there potentially be ways for them to find more efficient ways to do things in the, in their AI space, large language models that they are creating, perhaps. But you also have an area where there's been an enormous amount of appreciation in securities prices. And of course, anytime you get, big valuations and, a lot of people jumping on the bandwagon, it doesn't take much to shake a lot of folks out. But, we observe and are reminded that history is filled with industries that can change rapidly. We're more looking for things that we feel a high degree of future certainty. We're also looking for big returns. So we're looking to have it all. And so far, so good. But that is what we took from the perch that we sit at.
I should note the Goodhaven fund, GoodX US is the ticker, over the last 5 years has returned more than 16% per year putting it in the 99th percentile of its peers. Larry, on yesterday, like you said, Alphabet, a big holding, accounts for about a little more than 6% of your portfolio. Did you buy more yesterday? Did you sell? What did you do yesterday?
Well, first of all, Tim, thank you for calling out those numbers. Everybody here has been, working very hard the last 5+ years, and we really thank our clients and fellow clients and shareholders for being supportive of what we're trying to do over the long term. We did not make any transactions, based on what was happening yesterday, in Alphabet. So would we've owned it for a long time. Is there a price which we would add? I mean, the valuation has come way down. I think it's something like 20 times next year's earnings if you just go by consensus numbers. We may very well do that. Did we see anything in some of the developments that, led us to feel differently about our long-term fundamental view? And again, we've owned it for 10 years or so, where the answer is no. Do we think it's important to continue to be curious and think about how different industries that we've invested in will play out over time? Sure. And we hope management there is, despite being sitting on top, high up on the mountain, still has a healthy degree of paranoia, because as the great Andy Grove said, only the paranoid survive. And I think that's important. But yesterday's developments did not lead us to do anything, though. Again, more volatility we normally find to be our friend, and we would try and take advantage of it. We just didn't happen to find there was anything for us to do at that moment.
So what would you be buying or selling? Or are you kind of like waiting a little bit here, Larry, in terms of waiting to see a little bit more clarity about policies that come down from the Trump administration? See what we get maybe from the Fed tomorrow. Like, give us an idea of kind of your thinking here of this environment and whether you're kind of waiting a little bit and for what.
Carol, you pay a very high price for a very clear outlook. I think that what you're seeing in the backdrop, as we just posted our new shareholder letter for the Goodhaven Fund on our website for all to see. The economy seems to be, decent. Inflation has come down dramatically. Interest rates are kind of where they are. We try not to be macroeconomic prognosticators. It is not what has brought us to the party and helped us achieve good returns, but we would not expect dramatic declines in interest rates. But, the sun is coming up every day, and we are turning over rocks looking for things to do. And we believe outside of existential, really, scary, problematic moments for the economy and the markets, that's what we should be doing. And that has what has helped us to generate strong returns. So that's all we're doing. And we're trying to learn a little bit more about the things that we own. And we've been fortunate to find things to look at despite an overall market, again, that is high. And as we put in our shareholder letter, our portfolio is trading at a much cheaper valuation than the market and has had better growth characteristics over the last 5 years. And again, over time, as Tim pointed out, has outperformed. So we will just continue to endeavor to do that and be curious and look for things to do. And we don't need that many.
Larry, I noticed that you're about 19% outside. Well, equities are about 77% of the portfolio. Cash is about 3.5%. The other is government securities. Is that atypical for you, or are you waiting to buy something, or is that typical?
Not waiting for anything except to find more investments that fit our criteria. And again, we need to buy with a margin of safety, and we need to buy things we feel we have an edge in understanding. We like to be contrarians, but we don't desire having some kind of certain amount of treasury bills and cash. We happen to have been fortunate to welcome over the last year and a half, more new fellow shareholders. So we have more cash than we normally would. And by the way, those numbers, which you were kind enough to quote, we've accomplished with, kind of a drag of more cash than normal. But we're happy we've found things to buy recently, and we're happy to do so. Even though we've got cash and we will not spend it, recklessly or necessarily just to lower that percentage.
Hey, listen, we got to run. Larry, be well. Larry Pitkowsky, he is managing partner and portfolio manager at Goodhaven Capital Management.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.